Well, good day, all. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Monday, the 29th of April, 2024, 5:25 p.m. Central Time. So today was like watching paint. I can't explain it in the market. You watch it dry, and that was it. You knew that the markets weren't going to go much one way or the other. We started off with apparently there's Anthony Blinken, our Secretary of State, a very generous offer by Israel to Hamas, and we haven't heard a word from Hamas about it. All right, Hamas has to understand what happens at the end of the day. If they don't at some point take one of these deals, they're giving cover to Israel, and Israel's just going into Rafah to finish the job. If they take the deal, how do they stop Israel after the deal finishes for negotiating for something to go after Hamas anyways? I mean, the end goal of Israel is to drive Hamas out. Hamas's goal is to run Palestine from everything I'm saying. Those two won't last that way. So something's going to give whatever it is. However, each time we hear a little bit of peace, the gold market gets a drop. You take some war premium out of Brent and WTI. The dollar down today, but how much of this is the market's getting ready now for the two-day FOMC meeting that kicks off tomorrow? On Wednesday, we get the FOMC statement and then the press conference. On Thursday, you're going to get ADP numbers, probably Challenger Gray numbers, unemployment claims, and on Friday, the big report, the U.S. jobs report. So there's a lot coming in this week, but I think it's all about this coming Friday. So I'd be concentrating on that. But in the metals, they've come up. But if you look at where the 18-day average of closes is, other than the copper market, which has been on a tear to the upside, the other market's coming down. Now, why's copper been on a tear? Takeovers, takeovers, takeovers. BHP is not through bidding for Anglo American, and there's shortages of copper. So we've already seen coffee run, cocoa run. So traders, they want to get in on the next thing if that's going to be it. When we look at the gold market on a weekly chart, it's about doing nothing here, up a little bit. On the daily chart, it's down $11 now, so it was up. If you take a look, just so you get an understanding of this, you were up $10.50 today. And then tonight you are sitting here. Whoops, let me come back to that the right way. You've just dropped 11. Remember what I just said? You're marking time here. That's pretty much what you're doing. So if you're trying to make something out of nothing, you get into trouble very fast. Be careful. That's what happens to traders. When I look at the gold here this way, we still have higher lows, higher highs. The market has been unable to close over the 18-day average of closes. I use that close as my bias. When the market is under it, I have a negative bias. A negative bias says, you don't buy the market on buy signals because the overall bias is down. When you're over it, you're not looking to take sell signals because the overall bias is up. And I have found that a good rule to work with over and over the years. When I look at Bollinger Bands, it's been a while. It was the very beginning of April that we hit a band, and now we've just drifted down. You lost all this bullish enthusiasm in the market. You've settled under the 18-day average, not with a sell signal, by the way. Sort of a neutral signal at this point, and momentum has worked itself down where it's not in oversold territory, but it's knocking at the door. In the gold-silver ratio, I've now moved to the July silver, so I'll use the June gold versus the July silver as the ratio. As long as you're over the 18-day average, you have a bullish bias. Bullish bias means the odds favor these numbers could climb a bit. The higher the number goes, the more ounces of silver you need to get for 1 ounce of gold, which is another way of saying that silver is losing to gold. When you come to the silver market, you see that pretty clear. Number one, it is oversold. Number two, the market's got a higher high, lower low. It's just drifting. The powerhouse had been the daily chart in the copper and still is. It's got an embedded reading. I think on the first hard-breaking copper, you're going to see a lot of pros reach for this market. I'll be one of them, I'm sure of that with my clientele. This is not a market where it's over the band and just staying over it. So the buys on pullbacks, I think, get very interesting in this market. In the platinum market, you had enough rally starting on Thursday and Friday to knock out the bear trend. So this vertical price rise culminated when it hit the Bollinger Band, turned back up, and so often I say this market will get to that 18-day average and then sort of run out of steam and say, what's my next move going to be? And that's where you're at. In the dollar, void of a trend. You lost your bullish embedded reading right where I'm pointing, right where the S is. And the market has been drifting down, going towards that 18-day average, and that's what I would expect going into this week's FOMC meeting on Wednesday and the jobs data on Thursday, and after that, I think it comes alive again. So you put it all together, and you ask yourself, what do I do? Well, we're not through. Tomorrow morning, you're going to get the first quarter employment cost index, so that's going to be okay. I don't think it's a market-moving number. Redbook Group will come out with their sales. They've been running near 5% increases. We'll see the Case-Shiller 20 metro home area prices for February. They come out Tuesday morning. You know, we have been watching home prices continue to advance, just not a lot of supply. The April Chicago PMI numbers will come out Tuesday morning at 8:45. This is a little more important. The Conference Board U.S. Consumer Confidence Index, that'll be out at 9. We'll see how the consumer feels about everything right here. Secretary of Treasury Yellen testifies to a House committee on the fiscal year 2025 budget Tuesday morning, and that starts around 9. That'll probably be televised on a few stations. And you get, maybe, you know, you never know. And we had the Treasury refunding that did come out. I cover it in my full newsletter today, and I'll talk about it for certain in the morning subscriber video. So if you're one of these traders that likes to look at spiders, ETFs, and get an idea of what the chart pictures are, I have the perfect solution. It's my combo that I do in the mornings. Now, it's 6 in the morning. I start recording the futures market. We used to do it at 5. Now we're doing it at 6. A lot of people ask me to move it back an hour. We get a few more pieces of data in there as well, some of the reports, and that's good news. Some start at 6. I cover all the reports, though. Well, I want to say this the right way. Most reports are out by 9:30 in the morning on every day. Some come out at 10 o'clock, but 9:30 is probably by that time you've covered most. And I hit those in your Spider ETF video. So the 2 videos are very important. Why? Sometimes you don't get the picture in a market. Let's take copper. Copper's been on a run. Maybe you don't get the futures to go, but maybe you do get the copper ETF to go. So I'm always looking at the 2 together to see is there something there that makes sense. And we do a lot more longer-term trades in the ETF because the market leans itself to that. Remember, futures also have 90% leverage. They jump around completely different than the ETFs and the other, which are limited to 50%. You put it together, you get a game plan, and it's very inexpensive. We give a special on trying both. You would be getting about 44 videos in a 30-day period, each about 15 to 18 minutes long, all giving the reasons why to do something or not to do something, along with fundamentals, along with charts of both the daily and weekly and special reports. IraEpstein.com. Go to the word research or move your icon to the top here and give that a click. I'm Ira. You have a good evening. Talk to you tomorrow.